Hello, everyone. You know, every time, or sometimes, you just have to stop. You have to stop, you have to reset, and you just have to wait. You have to be patient. You have to expect the unexpected. Be prepared for anything. Hello. And just like that, is there's the lesson right there. Got to be prepared for anything. Like leaving music on that you didn't realize was on somehow. It might not have even been on, but it was showing that it was on, so I had to mute it. So, as I was saying, I know derailments, train derailments, are in the news a lot recently in the US. Um, and in regards to that, being prepared for the unexpected is all about being prepared for those derailments, those things that take you off course. Before we go into the 1K to 100K challenge in the Lunar Beaches Discord, and you can find a link to the Discord in the description below if you want to join and follow along or join the challenge. But being patient, that's what this is all about. Timing is everything. Timing is everything. Knowing when to get in and when to get out. That's timing. Knowing when to be patient. That's waiting. That's timing. Waiting for the right time. Knowing when to say enough is enough. Oh man, I'm on this killer win streak, bro. I've hit 19 trades in a row. You know what? I'm just going to let this one ride and see what happens. Wrecked. Yep, wrecked. Some people get lucky, most do not. So, timing is everything. That includes news events, big news events that happen all the time in trading. Thankfully, pretty neat feature on TradingView nowadays is they have the events, a little bitty icon down at the bottom where the time is, and it tells you what it is and yada yada yada. To me, it doesn't matter what the news is, what the event is. What matters is the price action that happens after the event. So, and again, that's all about timing. You cannot time the perfect trade. You can try, you can get really close, but you're not likely, because I just did it last week, so I can't say never. But you're not likely to hit the exact number on a swing low or like a swing high before, price reverses. Like, you're not likely to hit the lowest low. So, or the highest high that you possibly could for that long or short entry, respectively. Am I boring you yet? Am I trying to be boring? Maybe. Why would you do that, David? David. Oh, I gave away my real name. As if nobody knew. Uh, um, man, I got chlorine in my eyes today. It was super windy today because we had this storm front moving in, and opened up a bucket of 3-inch chlorine tablets. And in this bucket is a bunch of tablet powder. We were under a wind advisory today. And when I opened that bucket, the wind came in and blew a whole bunch of chlorine powder into my eyes. I flushed them out best I could. Used eye drops. So I'm still blinking a lot. The left one's pretty good, but the right one is still, like, burning. But, it is what it is. Did that derail? Were you expecting that? Did I deviate too much for you to stop paying attention? Or do you have patience to wait for what it is you're looking for, that you are craving? That you need? I hope you realize I'm not talking about myself. Although if you do, I'm flattered. But anyway, there's a lot going on in the world today. So something interesting. This is called a capo, by the way. This is for a guitar. So whenever Alex, I don't know if he's still here, but whenever Alex and I do something, I want to whenever we collaborate, I want to beatbox. Have a beatbox contest. Now he's really good. He'd probably beat me, but I know beats. Are you bored yet? Are you ready for me to get to the charts? I'm not ready yet. I'm going to. But I'm not ready yet. So, timing is everything, right? Right. Patience. So, when it comes to the news events, all we're looking for there, we're not, you're not trading those days, okay? Before I move on, none of this is financial advice. It's for entertainment and educational purposes only. Um, every trade that you make is on your own, and it's your own fault if you lose money. Yep. So, just got to get that disclaimer out there. I am not a CPA. I am not a financial advisor. I just like talking charts and talking ish. So, anyway, everybody thinks the world's coming to an end. There's a lot of fear. You got people talking about World War III. Whatever. I mean, maybe. Who cares? I mean, if it happens, it happens. What are you going to do? I'm pretty much at the point where I am just like, what are you going to do? And the best thing that you can do is just like get prepared. Be prepared for anything that can happen. You know, make sure you're stocked up on certain things just to have it, you know, just to have it, just in case. You never know. Um, yeah, be prepared. And so I just I just wanted to say that I love you, I appreciate you, and I want you to do well in your trading because that means you'll be doing well in life. And that also, hopefully, or maybe, possibly, you know, if you've taken anything from me, that maybe I helped in that process. That's all that I really care about. Um, you know, I will never have a paid membership. I don't see any need for it. If I'm making money, I don't have to get uh money from other people. I don't have to do that when they're trying to make money, you know? Um people can give whatever they want, but I'm not I'll never have a paid Discord or anything like that. No premium crap, you know. It's just why not just share the information? Why gatekeep it? Why keep it from people? And not only that, the community itself, the Beach Club, um, it's an awesome community we're building. It's great people, and we're all there to help each other get better at trading. Now, for me, I'm others in the Discord can probably help a lot more than I can simply because of my time constraints due to work and family. For now, once I can do this full time, that this being trading, I'll be able to help a lot more. Um, but you know, there's also people that have different trading strategies than me, and you know, I can't help that. I can't. I mean, especially if they're using like indicators that I have never used before, um, which isn't a lot because I've checked out a fair amount of indicators, and turns out they're just completely unnecessary. They're useless. They're not useless. I shouldn't say that, but they're unnecessary. Um, and I've seen them be unnecessary, and I've seen them mess me up on trades, and I think there's a reason for that. So, Anyway, distractions, distractions, distractions. A lot of fear. Oh yeah, this is where I was going to. Okay. So, Alexa, love you too, brother, by the way. Love you too, my guy. And Scar Crypto Face, let's go. See you in the chat as well. Um so Alex shared this graphic. Um, I shared that graphic back in like I don't know November or December last year in the Frankie Candles Discord. Um, not the exact one, but basically like the exact same thing. And then when he shared it, I was like, oh, someone else sees it, and then or has seen it anyway. And then today, Blockchain Backer made a video on it. And it's very interesting. So, this is in regards to the Fed rate hikes, the rate hike cycle from whatever 0% to when they start raising rates to when they go stagnant, hold the rates, to when they start cutting rates. The interesting thing about this is that it's the exact opposite of what so many people say that it is. What do I mean by that? So this is why, and I've noticed it recently, and I still love the guy. Still love him to death. He's a great guy. Tino from Traders Reality seems to be getting a lot into the news and letting news affect things in his trading that just should not be happening. Um, he even says the classic phrase, "Don't fight the Fed." Uh, which, funny enough, is exactly what you should be doing, is fighting the Fed. Um, Something a little bit literally, because it's the Fed, but put that to the side. Not like literally. Don't go out punching federal agents or anything. Don't do that. You'll go to jail. And since I said don't do that, you can't blame me because I told you don't do it. So, but anyway, but don't fight the Fed. Basically, so the idea is there's a lot of people out there that say don't buy or that they're not going to buy until the Fed pivots. You would think, okay, that makes sense. The Fed is pivoting. We're moving to a risk on environment. Risk on environment means a bullish environment for the market because that means people are putting risk into the market. That's what they're doing. They're betting on assets. They're betting on securities. They're betting on commodities. Whatever it may be, they're investing in it. They're betting on it. The problem is every time, at least over the past 20 some odd years, that the Fed has pivoted, over the past 23 years, every time that the Fed has pivoted, the stock market has dropped. And what do I mean by that? How much? Well, let's go to the old monthly chart here on the Dow Jones. So on the Dow Jones, we have a lot more information here. So this is the Fed cutting rates during the Great Recession. They're cutting rates. Why is the market dropping if they're cutting rates? Here. Why is the market dropping if they're cutting rates? I didn't look up, the actual dates and times. But if you want to see how this is true, just go watch Blockchain Backer's video from today. He's got your back. But yeah, so basically every time that the Fed cuts rates, the market plummets. Like almost like this big move here, this big move here, this big move down here. That's all part of the rate cut cycle, the end of the cycle. And as soon as it gets to, well, not as soon as, but around the time that they say, hey, or once they get to zero, basically, once you get to the last one, then it's time to start thinking about buying probably. But even then, you might have to wait. So you have the rate hike cycle. Who knows how long that takes? We're over a year and we're still adding on to it. We're still hiking rates. So we're over a year into it. Now we wait to see when the pause is going to be. Now the pause can be a bullish time for markets. They do tend to go up in this pausing period. Maybe even consolidate. It depends on the market. That doesn't matter. We trade every day, baby. But I'm just trying to give a broader picture here, okay? For new people and just people that haven't thought about it, don't know about it, whatever. And I'm also trying to test your patience. So I hope I am doing that. I've seen people come in, come out, come in, come out. I see them testing some patience. If you're leaving, you failed. If you're leaving the stream, you have failed. You have no patience. Oh, when's he going to get to the charts? When's he going to get to that thing that we were talking about in Discord? So anyway, when they start cutting rates, it's happened the last like 7 times. The market's plummeted. So knowing that information, just remember that. I mean, as soon as they start cutting rates, it happens. So the moment that it happens, start thinking short. Let's go to Bitcoin. Let's move on. Let's check the chat. Oh, nobody's in chat. And nobody's here. Why is that? I understand. It's okay. Let's go down to the hourly. So, timing is everything, right? So I shared in Discord today. Let's go to the clean charts. I didn't have my stupid alerts on it. And this is very frustrating because just before I came on stream and I opened up my charts, it had reverted my colors to the color of my candles and all that back to my old colors, and I don't like that. I don't know why TradingView did that. It's very frustrating, to be honest. But anyway, timing is everything. All right, so what we are going to do in this live stream is we are going to look at last week's price action at specific times. That's not last week. That's a long time ago. What? No, that is last week. I keep confusing this dip for the bottom because it looks basically the exact same. Yeah. Let's just go to a week. It doesn't really matter what week it is. Jesus. All right, right there. All right, there's Monday, Sunday, Funday, Monday. All right. I want to go to. All right, so the first thing you need to do here, okay, when you're doing this, okay, first thing you need to do is take your chart off of log. I'm sorry if I hurt your ears. Take your chart off the log. Take it off the log. If you're not looking like at a big, broader picture and you just want to look at pretty stuff, whatever, take your chart off of log. Take it off a log. If you're intraday trading, take your chart off of log. I don't even know if it matters. I'm just preaching to nobody. Go to your time zone and go to UTC 5 New York and change your time zone to the New York time zone. This matters. All right. So we're going to go to midnight on Monday morning, and I'm going to mark that off. Midnight, Monday morning. All right. So there's midnight. I need to make this a little brighter. You can't even see it on your screen. So let me increase the brightness there. Maybe the darkness. Maybe the thickness. Because I can't see it. There we go. All right. There's midnight there. Let's go to Tuesday. Tuesday, midnight. Right there. What? Dang it. Right there. All right. Let's go to Wednesday, midnight. Right there. All right. And let's go to Thursday, midnight. Bam. All right. Sunday, Monday, happy days. All right, don't do that ever again, David. All right, so now we've got those blocked off. We're just looking at what is called the New York Midnight Open. There we go. Let's drop it on down to the, let's go to the 15-minute. What? Where'd it go? All right. What just happened? What? This is not a good time to be acting wonky, TradingView. All right. Yeah. Perfect example. So you could even see this on the 15-minute. Okay. All right. So after midnight, this is what we're looking for. This also happens at 7 a.m. New York time and 8 p.m. New York time, but we're focusing on midnight. Midnight. What you are wanting to do at this time period is you are wanting to see what direction the market is going and think the opposite. Okay? Now, we are leading up into midnight. We are in an impulse. Okay? We're still coming up as soon as we break midnight. Let's go down to the 5-minute. This is so infuriating. that I have to continue to do this. Like, I don't understand why. It makes no sense. So you're probably already thinking, okay. So think the opposite. So the day has started. We've created a new high. And we've shifted down. So think the opposite. So go long. But what happens? It shifts up immediately. Immediately, it shifts up. And what's it do? Takes out this buy side liquidity? No. Takes out stops. Because where are those stops laying and why are they laying there? Well, if I put a line here, it's not going to do us any good. Let's take that magnet off. But that is where the stops reside, is up here. Okay. We also have a fair value gap right here. That's the down close of this candle to the up close of this candle. Or whatever. Put my magnet back on so I can get exact. So that the lowest price of that candle to the highest price of this candle. And that gives you this range inside this candle right here that price has not come back into. It just went straight through it. That's your fair value gap. There's another one right here. But price didn't come to that one. But you have this one marked off. Well, look at that. This one, the reason why it is significant, keep this in mind. The reason why this one right here is the significant fair value gap is because if you look left, it took out this low. That is the candle that took out this low right here. Midnight. Sell stops. What's the market do? First, it makes people think. We have support down here. Okay, they're running longs. That doesn't come into play until here. But you have to keep that in mind. Running longs, what is the market likely to do? Well, we come up. We're coming up at midnight. What are we thinking? Short, down. We come down. Oh no. Did I miss the move? No. Wait for that prominent move up that takes out those sell stops. It comes into that fair value gap. It nearly taps the exact top of that fair value gap. And you can enter there. Or you can wait for some kind of pullback and then a confirmation that prices just will not go higher, especially once you see this down candle right here take out this low. All right, now I'm probably for sure going to take a short. So you could either just get in that candle as long as you get in before here. If you get in after here, not good. Get in before here, you're good. Because what are we expecting? We are expecting for them to run those sell stops or buy stops, whatever they are. Because you got buy sell side liquidity here, and you have buy stops. So there's the buys, and that's their stop losses. And this is a relatively equal low, which is a good indication of buy stops. Stop losses. That's what I mean. They're stop losses. If I can take this magnet off and move this over here, and you say, you go short up here at this fair value gap, that's your target. Get out. All good. Let's take a, nah, let's not do that. Yeah, let's not do that. So, that's last Monday's midnight open. New York midnight open. And you see it plain sight. You got your fair value gap. Why is this one more significant than this one? Because this is the candle that took out this low. Okay? Draw it out. We also have what looks like resistance here. It is. But what looks like resistance here, come down. This looks like support here because now we've got two double taps, right? We got two double taps. So that's really strong support, right? We come up, and at midnight, we are coming up. This is when moves happen. They come up aggressively into that fair value gap, and they shift price down to take out the buy stops. This one might be tricky. Now, I did not do this beforehand, so let's see what we can gather here. So typically, let's see when did this move happen? So this happened at the London Open. So London opened at 2 o'clock. No, London opens at 3 o'clock New York time. Yeah, London opens at 3 o'clock New York time. So at 3 o'clock, they're shifting the market down. Is that right? I need to look that up real quick. When does market open London? I meant to, yeah. What time does London stock market open? 8 a.m. to 12 p.m. 8 a.m. to 12 p.m. Oh, you know what I could do? London. So, I said 8 a.m. Right there. Yep, I was right. It's 3 a.m. New York time. So let's go back to New York time. Bam. All right. So that happened right at the London Open. Boom. And if you notice, that was your daily bias. It was just kind of a down day. Now we can take a fib up here and we can take this whole move, okay? Now don't pay attention to anything other than what I point out. So right here, we have broken this high here. So this is the bottom of this move. Really, I'm always looking when this when this bottom comes in here and comes up, I'm looking for discount. So, or equilibrium rather. So when this one comes in, we come up to the equilibrium. We hit it twice. Actually, on this one, I probably would have gotten in here because we hit it right on the head. Actually, I probably wouldn't have got in there because at this time, it didn't get up to it. It had to come down further. So we did come down further, and once we did that, it came back up to the equilibrium. Now, the equilibrium is the midpoint between the high price of a swing high and the low price of a swing low. So this isn't here. Remember, this isn't here yet, okay? You just have to kind of block that out. Let's just do this to help. So that might even help you anyway. All right, so yeah. So you can go ahead. So what I like to do is I try to see what does it come up to. Fair value gap. That's right. Fair value gap. Oh, it barely missed it. Oh, barely missed it. But we're still right where we want to be as far as maybe taking another short. So we come up to equilibrium, whatever, and then my exit would be, well, you could exit here or here. This would be not a very big move. What even is that? That's what, 0.5%? So, whatever leverage you put on, multiply it by that. Not by the percent, but by the number, 0.5. And it even comes back, taps it 2 more times before coming down and ultimately taking out this low and taking out sell side liquidity. Meaning, if you're a market maker, that means you're buying. If you're an institution, that means you're buying. This is discount. We are in discount. Anything below 50 is discount. Anything above 50 is premium. Around the middle, that's your equilibrium. Come up, doesn't matter. Well, we do start shifting up. We haven't taken this high out yet. We've taken out this little corrective structure here. It's only a 5-minute time frame though. But we've taken that little corrective structure out there. Come down. We are kind of sideways going into this day. Now this is probably where I wouldn't take a trade. This looks like an 8:30 news dump. That's what it looks like. Right as the market opens. That's right when the market opens. It just takes a dump. Because if you're thinking opposite, then what you see, you're looking for the aggressiveness. So you get the aggressiveness, and then you're looking for a confirmation of that aggressiveness. Or not of that aggressiveness, but a retrace, a move back into that area. That's what you're looking for. Look, we had this same move right here. This was just smaller. That's what I mean. Boom. We're going up. Think short. What did we do? We took out a high. Where do we go to? Previous fair value gap. Look, man, I'm not saying. I'm just saying. Previous fair value gap. After midnight, we were coming up. 650. That's when the move starts. Notice you could get a partial in here. If we go to 650, let's just go to 650 and just move this over. And you can actually attack this twice. The opening, or that candle, is the close of that candle, really. I guess the close. The 650 candle For some reason, I don't know why, but that 650 candle came right up to it and then dropped again. So you could have picked up one here, you took that out there, waited, came back up, took this partial. Now this is the implied. No, this isn't an implied fair value gap, I don't think, because that happens in between two. Because I say that because so we go perfectly up to the midpoint of this wick right here, and perfectly at the bottom of this one. Yeah, this isn't an implied fair value gap. My mistake. And the tippy top of, let me go ahead and get a trend line on here, of the 650 candle is that the tippy top? Nope, that's the candle top. That's where it came up to, and then boom. When do you get out on this move? Well, probably when you see that big green candle take out this green candle, or this black candle, or red candle, or blue candle, because that's blue, it's not green. That's interesting to see a gap here. This is on the index chart too. That's weird. Did we? Let's throw some lines on here and let's just see what if anything happened with this gap here. Let's just throw that on there. All right, what's next? Let's get rid of that. If I drag this fair value gap even further, now this move, I don't even know if you could even catch that move. Let's see. Now I did say 8 p.m., right? I told you 8 p.m. earlier. What is the move on 8 p.m.? It's 8 o'clock in the morning. Damn it. This is the move an hour after trading. Exactly. It starts to move up. I wonder why. See, I don't have all the answers. I haven't gone back and, I mean, I could probably go look and see why, but other than the fact that we did build up quite a bit of sell stops up here, probably, because you got people thinking, oh, all right, we're moving down. This is heavy resistance. Heavy resistance. Oh, man, that was really heavy resistance, because we just we poked just above it, and we got wrecked. We just came straight down, right? That gets in your mind, man. That makes you think, oh, man, we're going down for sure. We're going down. That's what we're going to do. That's what we're doing, so I'm just going to go short. What happens? Market reverses on you, buys up all of those shorts in that moment, and then runs to take out all of your short stops that are up here. Because that's where your short stops are. They're at that resistance level right there. That's where they are. And that's what the algorithm, market makers, whoever is trying to do. They're trying to take as much liquidity from the market as they can. And they're going to do it. Now, that's how you probably could have seen this one coming. There's some reason that you could have caught that. I still have chlorine in my eyes, okay? It still hurts. But interesting to see the price comes straight down, hits that fair value gap, and then bounces off. Right? Let's go to the next midnight. So we were able to figure this one out as price was coming up. We think down. We do get our down move, and we at least take this out right here. Come up, watch this level here at the 650 mark. If it breaks it, it's probably a good time to just go ahead and cut the rest, just to be safe. Now, I did mark off that gap, but no, and we got to it today, so I want to see if there was like a reaction, like a specific reaction or anything. All right, midnight Tuesday last week, Wednesday. Now this is where it didn't work because it just went straight up, and sometimes that's just how it goes. You win some, you win most of them. Can't win them all. But maybe we could have seen it was going up somehow. But I don't have time to dissect that right now. But that midnight, yep. I mean, it missed, right? We were going down into it, right? And then shifted away from it. I mean, this is basically just a smaller version of what we just looked at. Let's go down to the 1 minute. It is really infuriating that it keeps taking me to current price whenever I drop time frames. We're on Wednesday. Okay. Hoo boy. All right. So midnight, market makes quick move up, comes down, comes back up, comes down, comes back up, down, comes back up. To me, this is indicating to me that, all right, we're probably in a bullish market because it's doing markup phases. I mean, it's pretty freaking obvious that it's doing markup phases. What's that mean? Let me get my handy dandy path tool. That means take off the magnet. Up, down, up, down, up, down, up, down, up. I messed up. That one should have been on that one. Down, up, down, up, down, up. You get the idea, right? Now this one does come lower, but that's just to take out stops down here. These buy stops. But it didn't stay there for long. It wasn't a harsh move down. This is just supply being bought up or longs being taken. That's all it is. But you're constantly getting that 1, 2, 3 correction. 1, 2, 3 correction. 1, 2, 3. And then the market phase is done. Except it's not. Oh my God. Nope, you do have a markdown phase. Come up. Yeah, anyway. All right. Let's just go ahead and go to the next thing. So that one, maybe we just missed it. Maybe. This is really freaking frustrating that it keeps taking me back to the beginning when I changed time frames. All I did was change time frames. My God, man. Now, perhaps I made a dire mistake and didn't put the 7 o'clock on here. Let's go here. Let's see what happens when I put 7 o'clock on here. Wow, it's already coming up. Yeah, It's already moving up, man. So yeah, you might just miss it. I mean, I don't know. But this is clearly a market phase to me. And it just keeps on going. Got a little pullback. What happens? New York open. Boom. Drop. Up. Drop. Up. Just a lot of chop until the afternoon. And then that's when it goes on a big old run. It's funny how that works. Timing is everything. Start marking down sessions. Start just paying attention to certain times of day. The certain times of day are midnight. This is all New York time. Midnight, 7, 9:30 when the market opens. Lunchtime, 11 to 12, maybe 1 o'clock. Then you have your afternoon session. And then 8 o'clock with your Asian session. And then start it over. There's typically a move, at least on the ES, between 10:50 and 11:10 that'll show you where the afternoon is likely to go. We can get into that later, but that's 7. At 7, it starts to move down. Just moving down, comes up, harsh rejection. I mean, some of this is just chop. I wasn't prepared. I wasn't prepared. Sometimes it's obvious, sometimes not so much. I mean, it probably would be obvious if I could even think clearly. I'm honestly probably gonna have to cut the stream like in a second because my eyes are burning. The worst that they have been this whole time. But yeah, just very interesting to see. All right, what happened at 7 here? All right, we're going down. Think up. Where do we land anywhere significant? I mean, just kind of like an order block here or here. Let's mark this high right here on this candle. Right down to it. Let's mark the wick. I didn't get to the wick, did it? But it did this one. Nope. It did this down candle one right there. Yep. Are any of these exact? None of these are exact. That's what I try to look for. I always try to look for exact, because then I can see if that happens to repeat, when it repeats, why it repeats. This is all part of price action. It's just figuring out when and where and why the candles do the things they do. So on this one, it's the high on this. Well, you wouldn't even count this one, really. I'm trying to see if there's an implied fair value gap. I seriously cannot even. My eyes burning. not quite. Anyway, sorry. Yeah, I'm gonna have to cut it, guys. Sorry. Uh, thank you to those that stopped by. Thanks for you that talked in the chat that I haven't looked at in forever. Okay, thankfully. I say thankfully, but really I wish you guys would talk. Thank you for coming by. We'll get more into this stuff. Sorry for that. Ugh. We'll get more into this stuff next time, at another time. But yeah, so I did react to that gap. Everything below it was a discount, obviously. It did react to that gap again. And again. And let's see if it does it again. All right, that's going to be it, guys. Like, subscribe, not financial advice, all that stuff. I love you all. I appreciate you. And thanks for stopping by. Don't forget to grab your board, go out to the beaches of the moon, and ride the waves. I'm out of here.